Kia ora. Welcome to Shared Lunch, brought to you by Sharesies in association with BusinessDesk. Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Dan Brunskill. I'm the markets reporter at BusinessDesk, and we have a special offer for Sharesies investors. If you use the promo code SharedLunch100 to sign up to BusinessDesk, you'll get $100 off an annual subscription. It's usually $249, including GST. The offer only applies to new BusinessDesk subscribers, and it can only be used once per subscriber and can't be used with any other discounts. Before we get started, we have some important information from Sharesies.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
And as always, if you have any questions for our guests today, you can submit them in the Ask a Question button down below. Don't put your questions in the discussion/chat area because they're pretty likely to be missed there. So go to the Ask a Question button, put your question. You can vote on questions, and we'll sort of try and get through those. Please submit questions. We love questions. If we have lots of questions, we'll go to questions early. So please do. Please be kind and respectful towards both our guests and fellow viewers. Otherwise, we will remove you from the webinar. Today, we're joined by Will Curtayne. He's the Head of Investments for Milford Asset Management. We'll be discussing the supermarket sector here in New Zealand. It's been the subject of pretty hot debate. The Commerce Commission reported on the state of competition in the supermarket game earlier this year and said it wasn't looking great. And the government has talked up shaking up the sector to allow for more competition. What does this mean? What are the chances we'll get a new supermarket to shop at? And is that actually going to mean cheaper food on the shelves? Let's find out. Welcome, Will.
Hi, Dan.
You obviously look after Milford's portfolio. What do you give us a brief description of what you do at Milford?
Yep. No, I'm one of the people who looks after investments at Milford. There's about 30 of us now who run investments there. I manage a couple of the portfolios, more focused on the Australian companies from the Australian sectors, and a little bit of New Zealand and global companies. So part of my coverage, I look at Woolworths, which is listed over on the ASX in Australia, and there's a couple of other companies listed there, Coles and Metcash. And full disclosure, Milford has owned all three of these supermarket companies and currently owns all three of them. So I'm sure we'll chat a little bit more on our thoughts on those companies today.
Interesting. And Woolworths owns Countdown in New Zealand. Would you be able to give us a little quick overview of what the supermarket industry in New Zealand looks like and how it works and how Woolworths fits into that?
That's right, yeah. So Woolworths owns Countdown. We know years ago in New Zealand, for us around, it used to be called Woolworths, and it's these days called Countdown over here in New Zealand. So there's about 180 Countdown stores throughout New Zealand, and then the Woolworths business, which owns Countdown, also has another of other franchise stores in New Zealand, such as Super Value and Fresh Choice. There's about 71 of those around. Then the other big player, of course, is Foodstuffs in New Zealand, which owns about 400 New Worlds, Pack and Saves, and Foursquares across the country. So those big major brands of Countdown, New World, Pack and Save, and some of their derivatives are kind of like 80% of what we'd call our grocery shopping or our convenience shopping in New Zealand. Then, of course, there's a number of other niche players, either small individual stores or premium high-end stores or the little convenience stores that do a bit outside of that.
Okay. And obviously with those two players, they're what we call the duopoly, Foodstuffs and Woolworths. But it goes slightly deeper than that. They sort of have a wholesale business that buys from suppliers and supplies to these franchise supermarkets. Can you talk us through what that wholesale business is? Because it's sort of an important piece of that puzzle as well.
Yeah, that's right. So, for supermarket businesses to be profitable and even to be able for them to deliver low prices to the customers, you need scale. And, it's one of these businesses. If you're very, very large, you can negotiate better prices with the supplier of those goods. So that might be the company that makes biscuits. It could be Arnott's, or it could be Kellogg's, or it could be any of the hundreds of brands companies in the world. So the bigger you are, the more likely you'll be able to rock up to Kellogg's or Arnott's and say, I want all that biscuits or cereals at a low price.
Yeah.
And then they can use that low price, obviously, to pass some of that low price on to their customers through lower shelf prices at Countdown, or they can pocket some of it as margins for themselves. So this leads us to what's a wholesaler. So if you set up a wholesale business, Woolworths does have a wholesale business, and Countdown in New Zealand has a wholesale business where they are buying these goods at cheap prices from Arnott's and Kellogg's, and then they're allowing some franchisees through Super Value and Fresh Choice brands to buy those goods at those lower prices that Countdown's able to negotiate. What they're not doing is necessarily allowing some unrelated supermarket to come along and say, hey, Countdown, could I please have access to those cheap biscuits you negotiated as well?
Okay.
They'll say, well, no, you're not our franchise, you're not our Countdown, you're not getting access to it. So part of this review in supermarkets is the Commerce Commission's brought it up, and the government's looking at it, said, hey, shall we force these people to give these wholesale prices, these cheaper prices that they're negotiating, to new entrants or new startups or more of the other independent players?
Mm-hmm. Yeah, so let's jump into the Commerce Commission's report. The Commerce Commission has had a look at the two big supermarkets that control the market and have said there's not, maybe whatever they said, it seems to me like they've said there's not enough competition, prices are too high. Can you talk us through what the Commerce Commission thinks about competition in the sector, and maybe you could touch on your views?
That's right. No, so first of all, prices are pretty high globally. You look around the world, and New Zealand will have some of the higher supermarket prices around the world, and the top, not the worst, but in the top kind of few of OECD or developed world nations. There's a few others that may have higher prices, like Iceland and Norway, but we certainly have higher prices than over in Australia and most of Europe and America. But I'll go into my views soon, so I'll leave that.
Okay.
The other thing the Commerce Commission came up with is that the profitability is too high. They're earning too much money.
Yeah.
And the fact that largely that new entry is difficult to do with the ability of a new entrant to get enough scale for those bulk buying benefits we discussed before, but also to get enough sites located in convenient locations that the supermarket's going to be viable, given that the two big players have largely locked up a lot of the good sites in the key population areas. And they also believe that there needs to be more unit pricing disclosure, they call it. And what's unit pricing? Well, it's making it like-for-like comparison. So what's 100 grams of flour cost? And they have to say what the price per 100 grams is on that flour, so that you can compare it directly with the price you could get it at the competition, making some of that clearer. And they recommended to do a 3-year review again of this. So, but that's their view. Do you want me to go into the government response, or I can give some of my own thoughts on that, Dan?
Yeah. Well, let's start with that point you made about, or the Commerce Commission made about them making too much profit. You're an investor, you love investing in companies that make profit. Does Woolworths make more profit than other businesses? Is it particularly profitable? Are their margins particularly fat?
So the Commerce Commission sort of came up with this idea that there's quite a lot of excess profit being made, and the government then, in their response in May, came out and the catch line was they're making $1 million of excess profit a day.
Okay.
So $365 million excess profit a year, which is a reasonably big number. So first of all, prices are high in New Zealand, partially for a couple of functions. We're a small nation at the end of the world. I know it's the center of the world for us, but the shipping cost to get us out here, you've got to pay imports, have got to ship along the way.
Of course.
These transportation costs and logistical costs to get imported goods out here. We are a big producer of food, so we should say we should have very cheap milk and other prices, because we're a big producer of food. But when you have free trade agreements, which New Zealand does have very good free trade agreements with China and other nations, the minute you do that, the price of that food you produce instantly goes to the price China or some other nation's willing to pay. And it was never more obvious than avocados, which they weren't part of free trade with China up until 4 or 5 years ago, whenever it was. And then the price of avocados basically doubled the minute they became subject to free trade, because all of a sudden, if you're an avocado farmer, why would you be selling at $3 per avocado in New Zealand where you could sell it $6 over to China? So the prices of our goods all of a sudden go up, so they to the international price. So that's one of the counterintuitive natures of free trade, is that despite us being a big producer of food, our milk and other fresh fruit and vegetables and meat isn't actually cheap, because people can sell it overseas at bigger prices, so we pay the same prices as them. Now, free trade's not all bad, right? It means we get cheap imported goods and other things. So I don't want to go into a big,
hopefully it
not an anti-free trade person, and just pointing out the technicality of it. So for these reasons, our prices in New Zealand, unfortunately, are going to be structurally high, no matter the profitability the supermarkets are making. So are our supermarkets making too much money? I believe they are making a little bit more profit margins than most competitors around the world are making. So they're making a little bit more than what most in Europe would make, or what most in America would make, but it's not substantial. It's certainly, in my view, nowhere near as much as the Commerce Commission decided. And I don't want to go too technical on the Commerce Commission review, but the long short of it, they appeared to cherry pick a measure of return on capital that was far in excess of their estimate of what it should be. I don't necessarily agree with that conclusion, because the return on capital the New Zealand retailers are getting is only marginally higher than what international supermarkets get. The profit margin, which is, of course, how much, the New Zealand supermarkets basically make 5 cents in every dollar is profit. Every dollar you spend there, they make 5 cents in profit. That's actually slightly lower at the moment than what they're making in Australia. And it's marginally higher than what a lot of supermarkets make overseas. So the supermarkets overseas may make between 4 cents in the dollar or 4.5. So you're saying we may be paying an extra half cent to 1 cent per dollar spent in extra profit to the supermarkets. That would translate more towards 250,000. It would translate into over earning by more like $70 or $150 million a year, not the $365 million a year the government was saying. That would mean the average person's paying $17 a year too much, or the average household's paying $50 to $100 a year too much. So it's not immaterial, I know, but it's not so substantial, in my view, that there's a gigantic competition problem. It's doesn't appear big enough to really incentivize some large international player to say, there's such a big opportunity in New Zealand supermarkets, they're earning so much money, let's go in there and lose money for 10 years while we get scale to benefit these margins. They would look at it and say, yes, they're over earning a bit, but I'm going to lose money for 10 years trying to enter that market. And is it really worth it when they're only over earning it slightly more than what we make in our home market anyway?
Yeah. Okay. So it sounds like you're saying there that theoretically, potentially in your view, if a new competitor came in, prices might only come down 1% or 2%. We're not sort of expecting to see 20% slashes in food prices if a competitor entered the market.
That's right. Ultimately, long run, prices could come down much more if a big, well-funded, let's say Walmart wanted to come to New Zealand in a big way. Well, prices would probably come down much more than 1% or 2% in the near term for a number of years as Walmart cut costs, run low prices to try and gain market share. But ultimately, if that business of Walmart's doesn't become viable, or eventually they'll need to make a profit on that as well, as your prices would only settle 1% or so lower rather than settling much lower at all.
Yeah, it's really interesting, that effect, when a business finally establishes itself and raises its prices to the point where it's making money. You can really feel that. Like I went to sign up for a free trial for Netflix to watch Stranger Things, and I find out they don't do a free trial anymore. If you want to watch Netflix, you just have to buy a subscription. And it's interesting because they've established themselves in the market, and what they want now is like the profit. And that struck me as interesting in this sort of like climate recently. Uber's done it as well, increased its prices. Everyone's sick of making a loss to grab market share, and they're wanting to actually make the profits now.
That's right. My thoughts were in exactly the same place, Dan, as you brought that up. But we can discuss this and question as well if we want. But Yeah, a lot of technology companies for years rewarded by growing revenue and didn't need to make a profit. But certainly, a lot of them around the world are finding investors are no longer rewarding revenue growth with no profit. They actually want the companies to make a profit now, and that's forcing a lot of these price rises by particularly technology companies around the world.
Yeah. So when you look at companies that sort of could make an entry to New Zealand, and as you say, you've sort of spelt out one reason why it might not be attractive is that it's a huge capital outlay for what might not be as big a reward as perhaps we in the media might have represented it to be at times. But sort of when you look around, who could be a competitor that could enter?
Yeah, I mean, obviously, warehouse is an obvious one that's got big sheds and not necessarily as good a locations as the Countdown or New World or Packetay, but ultimately a lot of them in pretty good locations for convenient shopping. So they are doing various pantry items or core good items, and they could see this shake-up as a little bit of an opportunity to try and increase the amount of shelf space they dedicate to food and goods as part of this. It's unlikely they do it in a big way. Ultimately those sheds are a similar size to a big Countdown anyway, and they've got a core business to focus on. So it's always going to be at the margin for the warehouse if they're doing through their current stores. So that may help a little bit for more competition, but I don't think it's going to be a game changer. Where else could you see it? You could get a big international competitor to come in. Aldi would be one that you would want to see. Aldi's a European discount supermarket over there. Lidl's another one. Aldi is in Australia, so they're in this part of the world. They're not big in Australia like they are in Europe. In Europe, these companies are huge. In Australia, they might be 5 or 6 or 7% of the market. They're enough to have a presence, to have a business, without really ruining the duopoly that exists in Australia as well. So they could come over. For them though, New Zealand, it's a small market, and as I said, the excess profit margins aren't so large that they would say we've got to go into New Zealand. This is an opportunity we can't miss. They would be here already if it's an opportunity they could have missed. But it's not to say they don't come. But I'm not convinced that the opportunity they would see here is big enough. One interesting possibility is if you look at the Australian supermarket sector, it's largely a duopoly as well with Woolworths under the Woolworths brand there, and the other big supermarket is called Coles. But there you do have, in addition to Aldi, which is not in New Zealand, you do have a large independent wholesaler, and this goes back to this wholesale idea that the New Zealand government's looking to generate. And Metcash is a bulk buyer, so it buys all the goods off the Kellogg's and Arnott's, and then it just distributes it to a big range of independent supermarkets and franchises in Australia, and they really are the third power. They're much smaller overall, these groups, than Woolworths, but they are a reasonable player in that market. So it's possible that Metcash, this company, could decide to open a New Zealand division, and the benefit they would have is they already have supply arrangements with a lot of the food and product suppliers in Australasia. I mean, they're already running a business in Australia. A lot of those agreements would translate to supplying goods into New Zealand.
Right. So that would be injecting competition on the wholesale level rather than at the retail level.
Absolutely. So then what you'd need existing independents may be able to switch buying a lot of the goods from this wholesaler, whether it's Metcash or another one that could be set up backed by the government or encouraged to be set up. And it may encourage new independents to get into the business. Some entrepreneurs and ambitious supermarket workers may see an opportunity to go set up their own stores, knowing that they can get access to cheaper prices through this wholesaler. And that would be, there's ways to, we can go into the government response. There's regulatory ways to try bring prices and profits down, but I'm a believer in free markets, and the best result would be some kind of wholesaler sets up and allows independents to do it, and it's all done without regulation, and it's done in a healthy way that brings prices down, but also creates profits for new businesses, and it gives new opportunities for entrepreneurs to set up retailers.
I reckon we should dive into the regulation response and what the government is thinking about doing and what that might mean. But before I do, let's just remind viewers to submit your questions. If you have questions about supermarkets, where the profits are, chuck them in, because we'll sort of get to those soon. The government, I mean, election year next year, people don't like paying huge amount of their wage at a supermarket, particularly during a time of inflation. It seems like the government's quite keen to take action on this Commerce Commission report. What sort of regulation is coming down the pipeline, and how might it affect a business like Woolworths?
Yep. So they came out with a statement in May, with their intent. How much of this gets put into policy, we'll have to see. But the intent at the moment is to firstly set up an industry regulator. The Commerce Commission will do it for now, but they do want to send up an industry regulator and a mandatory code of conduct, which is basically advised by the Comcom. So, regulation can sometimes never be as effective as it is. But I guess the goal there is to make sure there's not anti-competitive practice where supermarkets are saying to Arnott's, I'm not allowing you to supply biscuits to that new startup. I want all that supply myself. And that makes it very difficult for new startups. You can get practices where suppliers are pressured by their large customers, to not supply to new startups. So you've got to, a little bit of policing of that is probably good if done well. They want to put the unit price in disclosures. Like, I said the price for 100 grams of flour, or those kind of disclosures on the shelves. And they want to review the competition annually. The Comcom said a review in 3 years. The government said, no, let's review this annually. It's critical. They do want to encourage access to wholesale price goods. So this whole setting up a wholesaler or forcing Woolworths to allow people to have access to their wholesale goods prices. They didn't say that they're enforcing or regulating any of this yet. They basically put a shot across the bows to say to the large duopoly, do it yourselves, or otherwise we'll force you to do it anyway.
Okay.
And the final piece of what they want to do is they want to make sure that the access to certain property sites is there for any new incumbent who may want to set up a large supermarket.
Yeah, that's a really interesting one. I don't know if I'm being a conspiracy theorist here, but there are several towns in New Zealand where there are sort of two countdowns that share a car park and they sit right next to each other, or there's a New World and a Pack and Save like right next to each other. And I have heard some suggestion that this is an example of the duopoly sort of buying up available properties just so that a competitor can't open up next to them. Is that the sort of thing you're talking about, where these?
Oh, that all goes on. Yeah, absolutely. It's buying the only other site so a competitor can't go there, or it might be an agreement with a landlord where one landlord may own a lot of the convenient real estate in a certain area, and they sign a lease with that landlord, but part of the terms and conditions are they can't lease out that other site they've got a kilometre away to any other competitor. So these sort of agreements happen. They're not illegal, but it can be anti-competitive and a barrier for new competition to come in. So it's right to be reviewing this and trying to make some of these agreements, remove these agreements so that barrier isn't there. And I agree with that. It's a good move.
Yeah. And it seems like the supermarkets themselves have quite readily agreed to drop some of those land covenants and sort of be a little bit less protective of, as you say, the big boxes that you can put up in a city.
That's right, exactly, and it's a good move. Supermarkets here, they'll be doing everything they can not to have full regulation. So they've got an incentive to be sensible and do what they can at the moment.
Yeah. The other one that's just entered New Zealand, or is about to enter New Zealand, and I believe it's a listed company, is Costco. They've only got the one shop, and it's up in Auckland. Do you think that's going to have any big impact? They sort of have a very different pricing model. Are you familiar with Costco at all?
Yeah, that's right. I lived in Sydney for 8 years. They had a couple over there. We occasionally went out. It's unlikely that it'll be big enough. I mean, they've had a few in Sydney, but they stopped rolling out new stores over in Australia years ago. So they did a few to get on the land there. There's maybe get to trial the market, see if it works. And in the local region, it'll help a bit. The people live near to it will probably may want to shop there, but unless you're going to come in and get 30, 40, 50 stores, it's not materially going to change the level of competition. So, I'd be surprised if we end up seeing 24 Costco stores in 5 years' time. Yeah. I suspect it'll be almost a little flagship store, maybe 2 or 3, but it doesn't appear to me to be a big enough market to really move the dial for them.
Yeah. The other place that competition could come from is, as you say, startups and sort of the big trend that during the pandemic, at least, was e-commerce, and you couldn't book a supermarket delivery because everyone was booking them. What about the idea of sort of e-commerce direct to consumer supermarkets that don't have a big box? They just have a warehouse out somewhere and they ship your goods to the door. Could we see more of that as a form of competition?
Yeah, absolutely. And I think that's the most likely way it may come. Yeah. Ultimately, barriers to entry to get into supermarkets it's sort of 2 things: reaching that scale where you can negotiate good prices from suppliers, and then secondly, getting the big store footprint, which requires capital and leases and building sites. So e-commerce obviously doesn't have the need to get those footprints. So you remove one of those big barriers. The barrier remaining is, can startup get enough scale to buy the goods and deliver them straight to the door at prices that are still cheaper than in the supermarkets, and without access to a big wholesaler or scale, you simply won't be able to buy it cheap enough to deliver goods that cost less than they do in the supermarket. So that's where this has to integrate with the wholesale supply arrangements. Either we get a wholesaler set up in the market, or they get access to foodstuffs or Countdown's wholesale divisions, and then if that can happen, then I do think that this is a great way we could see some competition and people to get access to cheaper direct to the door delivered goods.
Yeah. That does seem like there's a lot of buzz around that. There's a startup, Soupy, that's been in the news a lot, and even My Food Bag, which is in the Milford portfolio somewhere, has talked about adding more grocery to its food bags as a way to grow revenue. But then of course Countdown has its own distribution and sort of is leaning into that. So potentially they'd be competing against the big player even there.
That's right, and I think at one point Countdown was delivering over 10 or 15% of their goods direct to the door over the past sort of year. So it really has been ramping that side. But if you get access to the cheaper wholesale goods, these businesses should be viable. Yep. Because the disadvantage for Countdown is if all of a sudden if other competitors have access to the same prices they're getting but don't have the cost of a big supermarket footprint, then they can actually undercut Countdown and deliver at cheaper prices, given their cost base is cheaper. So so I do think that this method's viable if we can get access to wholesalers for some of these startup businesses who want to do it.
Yeah. So that's really
My Food Bag, of course, already buys a lot of ingredients. Yeah. So they don't have the buying power or scale of Countdown, but they do buy a reasonable amount of ingredients, and they've got some negotiating power with suppliers.
Some relationships there, particularly from the fresh providers. I think that's sort of it's interesting to hear you talk about, like, the warehouse might tack some stuff on. Maybe that's more likely to be sort of essentials and non-perishables. My Food Bag might add more grocery. That might be different types of fresh fruit and veggies. You could imagine people piecing things together rather than having one big.
And that'll be a good idea for those that really are struggling with their living costs. For those who want to take the time to do it, the majority of people probably still like to have the one-stop shop and be able to do it all at once.
It is convenient. Hey, let's talk about the cost of living, because inflation is still pretty high. What was the last print was 6.9%, and lots of people are expecting a 7 in the June quarter. Investors are keen to invest places where they can ride out inflation. How do supermarkets fare in an inflationary environment? Because obviously that's where you feel the biggest bite off when you go to the supermarket and your prices are up and it's more of your paycheck. But you still have to buy food. How do supermarkets fare in an inflationary environment? Do they do good or do they do poorly? Do you have a view on that?
Yeah, we actually had been buying quite a lot of supermarkets last year because we did think that would be a good place to be in 2022. And our thesis for that one, we believe economic growth is slowing and share markets are going to go through a downturn, which is playing out. And the slowing economic growth is only in the early days, but economic growth in New Zealand is going to slow further as the interest rates go up and the cost of living squeezes people's money and house prices fall. And so, supermarkets are a defensive earnings streams. It's a necessity. People have got to buy food, and you benefit a little bit. It's been a bit messy over the last 2 years with COVID because as people got out of lockdowns, they want to spend in restaurants. But after that kind of catch-up spending in restaurants, when people are struggling with cost of living, you'll tend to eat at home more versus eat it out. So supermarkets are generally a good recession business. Now, what does inflation mean? Well, we thought that they would do not extremely well on inflation, but we did think that they would see some marginal earnings benefit from inflation. And the rationale there is that if the price of Kellogg's cereal goes up 10% and you just put up the price of Kellogg's cereal by 8% on your shelf, you lose a little bit of money on that spread, but your revenue line's going up a lot. If the cost of all of your goods have gone up 10%, your revenue's gone up 10%. And if their fixed costs, which are kind of the rent they're paying or the depreciation on their store fit outs that are only going up at 3 or 4%, they could have got a little bit of profit margin expansion, and their earnings growth may have been 10%, not 5% over the next couple of years. And we thought that would play out, and unfortunately for us, it hasn't played out yet. They haven't done badly, but they haven't had any improvement in profit over this inflation so far. And I do think as inflation's become a big topic, both in Australia, more so in New Zealand, but increasingly in Australia, the public pressure does come on these companies not to make any more profits or expand profits much over this environment. So I do think we misjudged how quickly that will occur. I think these companies I don't think they'll do badly in profits over this time, but I'm no longer expecting them to be big beneficiaries of this inflation.
Thanks for a candid answer. That was interesting. We should probably jump into questions, if that's okay with you, because we've got sort of 12 minutes left or so. Here's something we touched on, but maybe it's worth going into again, is how much does NZ's isolation, being at the bottom of the world, affect pricing? Surely the cost of getting goods to New Zealand may erode the cost saving, as in probably we're paying higher prices because it costs a lot to get food here than because supermarkets are earning enormous margins. Is that your view? And do you have any stats on how much having to ship food to New Zealand costs?
Yeah, no, I don't have the specific stats, unfortunately, but the person who asked the question is 100% correct. At the moment it's particularly poor as well, right? What we do know is shipping costs have gone up a huge amount around the world as a result of the boom over COVID and supply chain issues and a shortage of boats. And given we're so far away from a lot of the main centres in the world, that's going to compound to be a bigger impact on New Zealand versus most countries. And then, of course, more recently, oil costs and fuel costs are going up even more, and that makes the cost of shipping even worse. So we are structurally higher prices. One of the few countries in the world that has more, and developed countries in the world that has higher prices than New Zealand is Iceland. Where's Iceland? Well, it's across the ocean. It's closer to a lot of the Central Europe than we are, but the relatively small population nation that's isolated, it just costs more. And you go out of Waiheke. What's the rule of thumb in Waiheke? Everything costs 15% more. Well, why is that? Because you've got to send it across to the ocean. So the same rules apply, and it is why we've got structurally higher prices.
That makes a lot of sense. Another one we touched on, but maybe we can touch on again briefly. How come supermarkets charge $10 for a block of butter when it's made in New Zealand? Surely that's a strong word. Extortion from Fonterra. Why is it that we pay sort of high prices for dairy goods?
No, it's a great question. It's a great topic. Yeah, And we have free trade with dairy to a lot of countries, including China. If China want to pay $10 for our butter, then they'll only sell it in New Zealand for $10. Otherwise, they'll sell it overseas, and that's that is the downside for certain products of free trade. Is your price goes to the international highest bidder. Whoever pays the most around the world is the price we'll pay at home. And there's been plenty of stories over the years how much we pay for our lamb. It's a real shame, but that people pay a huge price for lamb overseas, and we pay the same price.
I assume we at least get the shipping discount, do we?
Yeah, so there's a little bit of that, right? Often it'll still cost a little bit more to export in the shipping, so there's a bit of that as well, right?
A bit of a saving, but not huge.
But,
not huge.
But your cost, the cost of a lot of these goods, if you didn't have free trade, or New Zealand didn't allow much exports or heavily tariff those exports, then you could have it a lot cheaper at home. But the general rule of free trade is that overall we lose, right? If you start doing that, we may pay more for certain supermarket goods, but we're winning through cheaper imports of cars and fridges and furniture and all sorts of other things.
Yeah, you could have $3 butter and a $40,000 1990s Japanese imported car.
Yeah. Exactly. $5,000 iPhones.
$5,000 iPhones.
I mean, they might be there soon anyway. They're heading that way.
I was going to say. But by then they'll have a washing machine inside them, so it'll be all good. Here's a pretty interesting question from Alana, with a point about scale that was made earlier in this discussion. Economies of scale, being big is cheap. Why is it that Countdown, being the bigger of the two, I think that's correct, it is not significantly cheaper than foodstuffs? Should they not have more scale, get even cheaper? What do you think about
that? Ultimately, they both get to a size that's big enough to negotiate those good deals. So it's right at the margin, but there comes a certain critical mass where they're by far and away the two biggest. That each of them are massive and got big weight together, that they're probably able to negotiate pretty similar prices. And it doesn't matter if one of them is 50% bigger than the other. They're both in of themselves big enough to get those good discounts.
Kind of a law of diminishing returns there. You might make a special rate for 1 million packets, then your special rate for 1.5 million packets is probably a similar special rate.
That's right.
Yeah.
100%.
Retail the prices to increase. Sorry, just reading this question to make sense of it. Yeah, so Colin asks, there's talk that the big duopolies will need to divest some of their stores. Could that cause retail prices to increase as wholesale prices might increase due to less that less of that negotiating power per shop? Could it be that
This is a really good question, actually, because it's something we should have touched on, but we didn't. And that's the risk of regulation. With competition, there's an optimal level of concentration you often want in industries. You want a few big scale players who compete enough together that the profit margins aren't excessive, but those big players can use their economies of scale to deliver goods at low prices. And the risk is of regulation getting overly involved and forcing too much competition or too many wholesalers is that the profitability for Woolworths and foodstuffs go backwards. They say we actually don't want to. We want to shrink our business. We're not making enough money. The whole industry fragments too much. Power goes to the suppliers and away from the supermarkets, and then the suppliers all make excess profits.
Yeah,
and the supermarket and the overall prices at the end at the shelf go up. So it's a risk. You've got to be careful of getting too involved.
Yeah, it's really interesting. The different structures move the rewards to different people. Yeah,
that's right.
Okay, that's really interesting. Somebody asks, is Milford currently invested in supermarket stocks such as Woolworth? The answer is yes. What sectors generally does Milford like? Is that a question you can answer quickly?
No, I can. So I said we've owned quite a bit of supermarkets, and we owned all three in Australia: Woolworths, Coles, and the wholesaler called Metcash. It was listed. They actually held up pretty well early this year. A lot of the markets, as you would know, have been weak. New Zealand's down 15%, the US is down 15%, and tech stocks are down a lot more. So we actually did pretty well defensively. They were quite defensive. They held up quite well during market volatility. We did start selling some of our positions down in them because as the rest of most companies on the share markets fell, all of a sudden Woolworths and others became looking quite expensive, given that other companies were getting cheaper. Investing, a lot of it is, where's the best place to make buck? And if everything else gets cheaper, that may become a better alternative. So we did start selling some down. We still owe them today. I wish we'd sold down a little bit more aggressively a month ago, because they've fallen a lot in the last month. We still hold on to some. I said I don't think they're ultimately going to be winners from inflation like we thought they may have won from inflation. Even if they don't win from inflation, they're defensive and safe businesses. So they're not going to be. You're not going to lose your shirt completely on supermarkets. Can you lose more money? Of course, yeah, they can go backwards, but they're not as bad as the risky business models that are out there. And problem for Woolworths is it was a little bit too expensive, and what you found is the share price just came back because the company was a little bit overvalued. What other sectors do we own? The best sector we've been is energy and oil and gas companies. Oil is the wrecking ball of the world at the moment. The problem in the world at the moment is we've got inflation, and that means interest rates are going up to battle that inflation. And as interest rates go up, the price of assets go down. House prices fall, share markets fall. Eventually, economic growth, if interest rates go up so much, will stall, and then that'll make asset prices even worse. And why have we got inflation? Well, there's heaps of reasons, and we won't go into it. But at the moment, oil is not helping inflation. It's continuing to go higher. It's undersupplied, and for the time being, we're happy to own the wrecking ball rather than the things it's wrecking. So we've got some oil and gas companies, but don't rush out there and buy heaps of oil and gas companies, because having some in your portfolio like we do is a sensible thing. We're an active manager, and if economic growth slows too much, we will eventually demand for oil will fall, and oil and gas companies will go backwards. So we look to be active. We'll own them, and then we'll be looking to take profit before the recessions begin.
And presumably trying to move ahead of these trends, not sort of respond to them in many ways.
Absolutely correct. And we're wrapping up soon, but just one thing in wider investing is in our view, we've had 5 or 6 good years to make money over the last little while when interest rates went down and conditions were good. But we're in a storm now. This interest rates going up is not good for most investments. Our goal is just to keep as much of your savings in the money you've got at the moment while the storm's coming through. And the storm will pass, and it'll probably pass by, earlier next year. And then you're back into a good environment to make money again. So we're not out there trying to make heaps of money over the next 6 months or the next 12 months. But you're looking to be sensible and keep your money and wait for conditions to be favourable again. And that's where you get back to generating wealth.
Yeah, it's time to play a bit of defense. Okay, well, that's super, super interesting. Thanks so much for taking the time to
please to talk, Dan. So thanks for inviting us on.
That's good. We'll have to have you again. Thanks so much for tuning in, everyone. And big thanks to Will for joining us. We really appreciate your time and insights. Next week, we have Francis Cook talking to Mike Rowan, the CFO of Meridian Energy. If you're interested in investing in some energy stocks, there's one right there. There's a link to that. You can register now. Should be a very interesting discussion. But until then, enjoy the rest of your week and stay safe.